Welcome back to the channel, guys. In this video, we're taking a look at Mai Finance, also known as Qi Dao, that is Qi Dao, DAO. And this one is all about creating stablecoins via locking up collateral assets, so a CDP stablecoin position. But this is slightly different to other protocols that I've seen. You're essentially creating your own vault and taking a loan against yourself, isolated from a pool of other assets. So this means you lock up your own collateral and then take a loan in the MAI stablecoin, that is their native stablecoin, MAI, against your collateral. So this means less pool risk. Think about Cream Finance, for example, and so less vulnerabilities in general. And all of this is done with a 0% fee, no origination fee. You can keep this loan for 100 years and you wouldn't pay anything. You only pay when you close your position and repay that collateral, and the cost is just 0.5%, so lowest in the industry that I've really seen. And I think in general this just has a load of unique selling points, which we're going to go through in this video. I'm very bullish on this. I've started to take a nice position and will continue to add to this for the foreseeable. So let's jump into what they say about themselves. Some of the stats we can see here: roughly 300 mil in TVL right now, and Mai Finance is an open source and non-custodial stable protocol for extracting value out of priced assets. You can see that these guys are multi-chain, so their Mai token here is on the likes of Phantom, AVAX, Solana, pretty much all the chains that you would want to utilize. And you can swap the stablecoin for other stables as well. They have a protocol inbuilt called Anchor. You can swap Mai to USDC, for example. And so this means that for the general user, maybe you've got an asset that you're wanting to hold for the long term, but you're not really making full use of it. Well, you could lock it up in your own little vault, take out a stablecoin loan against that, and then put these stables to work in whatever form that you see fit. And of course, with all this liquidity across chain, you can find the best farming opportunities that exist in cryptocurrency. So this is pretty damn cool. They've got a list of extensive partners here throughout the industry, which really shows that this is a team that is shipping and also making bridges with other DeFi protocols across the full crypto landscape. So here is Qi Dao, the token, and QI is the ticker. $44 million in market cap with a little dump that we're seeing today here. So this is a low market cap cryptocurrency, but with a very big ambition, and potential market scope for this is enormous as well. As we know, stablecoins, CDP positions are a backbone of the DeFi industry. And so I think this has plenty of room to grow from a rank of 606 out here. Over the last 30 days, you will notice this, a bit of a dump off. So there was a exploit over on Superfluid, which was a partner of theirs. So Superfluid, I think it was a hack of around $7 million worth of the Qi token, and this caused the dump here all the way down to around 20 odd cents. But as you can see, over the resulting next 24 hours or so, it bounced back pretty sharply, pretty much retaining a $1 price there from that big dump off. So didn't really affect things here. And then we're seeing this kind of meandering down at around 75 cents, which looks like a decent entry position as of right now. And the benefits of holding this token is that you can stake it, and the longer you stake it, the more power that your stake has, and you get protocol revenue as a kicker. So this is a revenue sharing protocol and they are making profit. So I'm going to run through the various parts of the site here. We're currently connected to the Polygon network. This is where you need to stake your Qi, I believe. And this is where I've staked mine. You got some notifications up here of new collateral available, the likes of Harmony One recently added. So over time, as they add more collateral types, there's going to be more interest from a bigger audience to get involved and start minting the Mai stablecoin. As it says down here, vault lending, each vault is a separate loan with no interest rate, just a repayment fee. And you can see that there is this kind of cap here, so a debt ceiling as they call it. You can't just mint unlimited amounts of Mai. They need to open up access to this and increase the debt ceiling so you can go ahead and start minting. As you can see, currently 67% of available Mai have been minted in this collateral pool here. So let's jump into a vault. Click on the vault button, create your own little vault up here. And from here, we can see the various collaterals that they're willing to take. You'll notice there's quite a lot of Aave interest bearing assets on here. Also the likes of Wrapped BTC, ETH, Chainlink, Aave itself, Curve, for example. And also on top of this, you're going to get some borrow rewards in the Qi token. So you're actually going to be paid to start borrowing. Some of these have pretty healthy borrow rates on them. The likes of Curve down here at 20%. Pretty good stuff. But as you can see, a load of different collaterals. And if we switch networks, say over to Phantom, they are partnered with Beefy Finance. And so you can see some of the Beefy assets on here as well. So you can really think about a load of different strategies that can be used with this, with deposited funds over on Beefy, and then using those to mint more MAI stablecoins and really lever up. So a load of possibilities with this protocol. So within the vault here, you can deposit an amount of collateral asset. You can see the minimum collateral to debt ratio on here, 150%, the amount of rewards you're going to get, and all of the relevant information in here. So I've deposited just the one Matic to show you how this works here. So my collateral here, of course, just scale this up with a few zeros on the end to make some sense. Collateral value, one Matic is $1.50 roughly. There's no current available MAI to borrow. The debt ceiling has been reached on this one, so I'd have to follow them on Twitter to keep up with announcements, or Discord where they would let us know. And then I can borrow against this. So I can borrow some MAI here, and we have a slider, a collateral to debt ratio slider, so I can see how much I want to take out in terms of MAI. Maybe I'll take out just 15 cents, or if I want to pretty much guarantee that I get liquidated here, take it all the way up to $1, as that 150% rate means that on $1.50 I can take a maximum of $1 back out, and it lets me know that I would be liquidated if Matic reaches $1.51 here. And also you see down here 0.5% fee charged on repayment, and that is taken in Matic itself once you repay that collateral amount. So a pretty cool CDP position to understand. You can see the workings here, and of course I'll be rewarded in Qi on top as well. So essentially being paid to borrow some MAI against my own collateral. So if you were to play it really safe down here, you can make money for free pretty much, and just keep yourself at a ratio that means your liquidation price is super, super low. So 0.5% fee only upon repayment. Let's have a look at some competition. RV, the variable rates here on some stablecoin positions. If I want to borrow some DAI, for example, 2.6%, USDC, USDT over 3%. And then for a very much like-to-like protocol, this is Oasis, like kind of front end of MakerDAO, where you can mint the DAI stablecoin. If I was to take Matic over here, the fee for this is 3% per annum. You can see some of the various tokens on here, 6%, 1%, 3%, 0.75% for that type of BTC, 2.5%, 3.75%. Essentially what you can see with this is there is a competitive advantage for 0.5% upon repayment only and no ongoing interest payment due. So this is definitely a lot cheaper than the competition. Then we have Anchor over here. This is where you can either mint some MAI with other stablecoin assets, or you can take your MAI and then convert them into other stablecoin assets. So say you've just taken out your position, you've got MAI on hand, but you know there's a big opportunity to farm utilizing USDC somewhere else. You could come and swap it on here, and there is a 1% static fee on here, and those fees go back to the Qi stakers. We have the farms over here as well, so various LP positions you can take. I am farming the MAI stablecoin to USDC stablecoin over here and getting 10.4% paid in the Qi token, but you can see all the farms on screen here. Go and check them out for yourself. They do take a fee on this. 0.5% of the LP token is taken when you make that deposit, and we'll go over how that contributes to protocol owned liquidity a little bit later on when we cover the fees, but you can see the LP positions there. Then we have this yield page with the various yielding opportunities on this. And then we have, of course, Boost, which may be the most interesting place to look if you want to get involved with a revenue share here. So Qi Boost is your opportunity to increase the power and rewards of your Qi. So this gives you increased governance, so voting rights, and also claims on the revenue share. Weekly Qi staking rewards include 30% of the repayment fees for all collateral types, plus a 25% weekly boost converted into Qi. Rewards also include 100% of the farming rewards from the deposit fee revenue used to farm Qi Matic. Revenues are collected weekly and distributed on the following Wednesday. So this essentially buys back the Qi with these revenues and then distributes it to the stakers. You can see people are locking in for an average of 2.67 years. Like the curve gauges down here, you can lock for a week all the way up to a 4-year period, and I'm going to be locking in for the whole 4-year term to get the maximum booster. My goal with this is to utilize it as a revenue source and become an Nkuma. So lock your Qi for a predefined amount of time, get a booster on it, get Qi as the receipt token in here. This is escrow Qi, and get a boost to your voting rights, and of course course the revenue share. Then you can see the rewards tab. You've got to be in the pool for at least 1 week to get some rewards. And they've also got a bond tab over here as well if you wish to check those out. But that is pretty much the basics of the platform and how it works. Let's also compare against other stablecoins. So this is where I'm thinking about the size of the applicable market here. Stablecoins are huge, one of the most important cryptocurrencies there are. And if we just look at the various market caps here, Terra UST, super bullish on this, $13.3 billion. Magic Internet Money, quite similar in how it operates with Mai Finance here, $2.7 billion. And in position 14 down here is Mai, current market cap just 263 million. So I do expect this one to start rising the ranks as time progresses and really start to challenge this, top 6, 7 spot up here and get into the billions of dollars in total market cap. So this is something I want to continue to track as we go forward and see the progress of this stable asset. Now, another reason I'm super bullish on this is the amount of cross-chain integrations it has. They've got their stablecoin Mai literally on a load of different chains already. So this shows you that the team have been busy making these integrations, these partnerships, and getting the stablecoin accessible on different networks and ensuring deep liquidity as well. You can see the liquidity on here, Polygon over 91 million, and on Kronos 919,000. That's a lot. And if we just click this button here, you can see all the various chains where Mai is in circulation and you could come and bridge across to, and thus opening up all the various farming opportunities or ways you want to lever up with the Mai token. So as you can see, it's a bit of a gateway into all of these different chains, BNB, Phantom, Metis, Moonriver, AVAX, and more. And I think having a multi-chain seamless experience for your token really does open up a ton of different doors. So I'm super bullish on it for that reason alone. Let's jump into this here. So a recent proposal was posted by Celsius. They're interested in Mai here, and they've said that they want Celsius X, which is their new DeFi arm, to add wrapped assets as collateral for the Mai stablecoin and put some of these maybe slightly useless assets to work. Assets here were ADA, Doge, and Ethereum. All of them have passed and have been added to the platform. And for Doge, for example, there's a big deposit incentive for those who take their CX Doge and get it over onto Mai Finance and start getting some Mai stables. So this kind of shows you other protocols are really taking notice of Mai Finance. Celsius being one of the biggest CeFi/DeFi companies out there, over 1 million users, and a potential huge black hole for Mai, as these guys could really pour in tons and tons of assets into the system and start minting a lot of the Mai stablecoin and then generate more yield for their users. So this is clearly useful for the Celsius business model. And if they can make money on this, and we just look at $44 million as the market cap of Qi Dao here, it seems pretty damn undervalued. So this was a big proposal in my book. All three of these passed, as I say, and it has the attention of Alex Mashinsky. So that is no small order. Then more recently, this also passed more revenue distribution to Qi stakers. A vote has been launched to distribute 50% of interest revenue to Qi stakers weekly. So this was the proposal here. Essentially, these guys make a load of interest revenue from their various market operations, with their token being in loads of different pools, etc. They generate around 200k weekly interest revenue, 800k per month. And so they're saying with this revenue, they want to put 50% to Qi stakers. As you can see, 99.99% of people said yes here. And so this means even more rewards to the Qi stakers going forward. I think this has been overlooked by a lot of participants in the crypto space. And for me, it seems like they're going to be a real cash cow. All governance proposals get put over here, and we literally get to vote on absolutely everything that passes. So this has a real solid DAO structure to it, not just in name, but in nature. They're actually going ahead and ensuring your votes mean something, which is something I find very attractive about this protocol, really being able to get involved with it at the grassroots. Then each and every week they have this fundamentals review. You can see the net income. So this is the income that would go to the Qi stakers, a load of stats, including who's holding it, how many people, how much Qi is in circulation. 52% of circulating supply is actually staked for 2.66 years. You've got pretty much all the receipts of these revenue sources. So everything is totally transparent over here. And this says retained revenue, i.e. the revenue structure has different percentages from these different fee sources. We'll scroll down and show you those. So when you stake Qi, you receive eQi, escrow Qi in return. Each Qi is calculated based on the amount of Qi a user locks up and the duration they choose to lock it for. Locking Qi increases your Qi power, the voting power, by the amount of Qi you gain. It will also enable you to receive part of the protocol's revenues below other revenue streams for Qi stakers to receive. So 100% gains from farming deposit fee revenue. So that is the LP token being utilized for the Matic Qi pool, increasing protocol owned liquidity and generating a revenue source. Also 30% of repayment fee revenue. So that calculation would be 0.5% of all the vault closures would go into the pot, 30% of which comes back to stakers, 70% goes to the treasury, and then 30% of anchor swap fee revenues also goes to stakers, and the remainder going to the treasury fund. So in terms of the deposit fees of the LPs down here, you can see a breakdown of the protocol owned LP position, currently at around $2.26 million there. So these guys, super transparent, giving you literally receipts on everything they're doing, showing you how this is a revenue producing protocol and how you can get involved by staking your Qi for Qi and getting that distribution, some sweet yields. And I do think long-term time horizon, this should just continue to grow and grow and grow. The revenue streams will get bigger. There's always going to be demand for stable coins. It's one of the cheapest CDPs on the market and is already fully multi-chain. Keela and Ben participate in these fireside chats that they do on a regular basis. Go and check them out. This one here with Celsius X is really interesting. Two very smart young dudes who I've been super impressed with as I've watched quite a lot of these different episodes. And I think having that forward-facing leadership in decentralized finance actually is very good, as it gives an extra layer of trust to the system. So that is Mai Finance in a nutshell. I'm very bullish on this one, going to continue to add to this position and continue to lock for 4 years and make this a real revenue stream in my portfolio. I'd love to hear your opinions on this down below in the comments section. Is this a good one? What do you think? Would you get involved, or are you already involved? Can you give me some feedback? I'd love to hear from you guys. But until next time, make sure you're subscribed. Goodbye.